So here we come to our next document. It's called Statement of Changes in Owner's Equity. Now, we're putting this all together, and so over here what we've done in Chapter 8 is the 6-column worksheet where we got all our information. The next video for Chapter 9, what we did is the income statement. We're going to then go to the Statement of Changes in Owner's Equity and finally to the balance sheet. Now you got to remember, in my last video I told you that for Chapter 9 we're doing these things in such a way that non-accountant people can actually understand what's going on. So because you have experience as accountants now, you understand that you could read a 6-column worksheet and you'd be like, yeah, I get all this and I understand it. If you ask me anything about it, I go find it. But what we're doing now in Chapter 9 is we're trying to put the 6-column worksheet in such a framework that it condenses information, breaks it down into a more outlined and understandable format for people who really don't know what they're looking at. And that makes it hard for you because you're going to ask yourself, why do we do what we do in these cases? This statement of changes in owner's equity, why do we have to do this? Well, this is a way of describing what's going on so that other people can understand it. So that's what makes it most difficult. And in fact, this is probably the form I hate the most, okay? Because what you're doing is you're essentially having to go backwards in time and show someone how you got here. So we're not creating anything new. We're not doing something where, we got to fill out this form so that we can arrive at more stuff, for better numbers, for more information. We're essentially backtracking and saying, hey, we started here and this is how we got to the end. So you got to keep that in mind when you're thinking about this. We're not moving forward with new information. We're actually going back in time and looking at old information and laying it out in a different format so that other people can understand. Okay? So here we go. When you get to your statement of changes in owner's equity, people want to know how much money have you made and how has this affected your business and how has it changed your equity? How much net worth do you have as an owner? So how much is your business worth now? We want to see how it has changed based on the income that you made and the actions you took during that accounting cycle. So it's going to start off with beginning capital April 1st. Now, if you had the records, you could go back to the beginning capital on April 1st in the ledger and you would use that number and look it up. But because the book wanted to save some paper, they just give you the 6-column worksheet and say pull it from that. But remember, the 6-column worksheet is the ending capital, right? It's already included all those numbers in there. It's the ending capital. So what you need to do is look at the 6-column worksheet, and in order to find your beginning capital, you actually have to subtract these things. You have to subtract your investment made by the owner. So you take your statement of your 6-column worksheet ending capital, you subtract what you have already added in, which is the investments by the owner, so that you can show people where you started for the beginning capital. Let me say that again. In the book, you have to go to the 6-column worksheet, but that's the ending capital. So you need to subtract investments by owner because you've already added it in the 6-column worksheet, in order to show people where you started this whole month. So we're working backwards to show people, okay, look, here's where we started. I've got the numbers for the end, but here's where we started, and now I'm going to show you, this is what I did. I added investments by owner, and so it's kind of like, this form is like showing people in baby steps how you got the money you did, okay? Because the IRS doesn't want to go through all your stuff. They just want to get a piece of paper and go, what's your statement of changes? Okay. So you almost have to put it in like baby talk terms because you guys know so much more than the average person now. You're actually putting into this simplistic format. Okay? So here's where I started. You have to work backwards to where you started. And then you add it back in and say, this is what I did. And this is how I got there. This is my total. My net income. See, where am I going to get this? Okay, net income comes from the income statement. So if I look at the income statement, I can see if I made money or lost money. In this case, I made money. So I started here. I added some things to my business. I made some money, and that's why I have an increase. Okay? So if you think of it in those terms, you're like dumbing it down for someone else who doesn't understand accounting, and you're walking them through how you got there. So it's not a new number. You had all that information in the 6-column worksheet. You're putting it in a format that someone else can visually see and understand. Okay, so here's where we started. We added some things in. We got a net income, and it meant that we're adding more. This is our total increase in capital. So you're going very step by step. And that adds to our capital. There's our subtotal. And so that's why our business is worth more. Okay? All right. And so for you guys, you understand, yeah, I increased my capital accounts, and therefore my business is worth more. This is my, increase in capital. And we write that as a subtotal if there are more things to do. Now, what we'll take away from my capital is if I paid myself as an owner. So I took out $700 as a salary for myself this month, and I have to subtract that out. So this is how much our business was worth. Then you'd go to the 6-column worksheet and you'd say, but here, see, look, I took 700 out. So that means my business is now only worth this much. Okay? So the statement of changes in owner's equity is a way of walking people through things that you as an accountant already know, but you're presenting it in a format that they can then figure out how you got here. Because from the 6-column worksheet, you're just going to be like, yeah, there we go. It's my ending capital. And other people are going to say, well, how'd you get there? What happened along the way? So especially the IRS for tax purposes, they're the ones that really want the simplistic format. And so most businesses just do it. Okay? And so you're here and you're going backwards. You're saying, okay, but the way I got here was, and so you have to subtract these numbers out to find your beginning capital. And then you add the numbers back in to show them how you got to this total that you're going to add to your capital account. And then you're going to go to the 6-column worksheet and say, yeah, and remember, I took money out for myself. There it is. That's the withdrawals. And so here's my ending capital. Okay? So there is no format for this of any kind of standard, because these are all the things that could affect capital accounts and owner's equity. And so every time you do it, it might be different. And that really throws people off, okay? Because if you want to memorize this format, now what if you had a net loss? See, up here I put net income because these are all the things I add, but I wouldn't add a net loss. I would take it away. So I would actually put, if I had a net loss, I'd put it down here. So the things that I subtract will be withdrawals and have a net loss, and that'll get to my ending capital. So if it's a net loss, this comes out and it moves down here for net loss because it's less versus add. All right? Now, what happens if there's no investments by the owner? Well, it's not there. I mean, you don't even put a line through it. You just don't put it in. You just put net income. Unless it's a net loss, in which case you have nothing to add, and you just have beginning capital less this, less that, ending capital. So you're just describing the things that affect the capital account, and you're just putting them in there. And so 6-column worksheet will provide you with some of this so you can backtrack. Okay? And then sometimes it's there and sometimes it's not, and you got to put it in the format that presents it to someone so that you can show them how you got to the numbers you did. So that's why this was kind of frustrating and not very intuitive, because you're not working towards a goal, you're actually going backwards and saying, hey, this is how I got there, and hopefully I can put it in a way that you non-accountant people can understand. That's what you're really doing here. So that's the frustrating part, and you just have to work through that. Reference the chapter when you're doing the statement of changes. But here's the thing, if you do it in this format, you have to do a statement of changes before you can get to the balance sheet. So on the test, what a lot of kids do is they say, well, I got a 6-column worksheet and I'll just do the income statement and the balance sheet and I'm done. If you do it in these individualized formats instead of the big 6-column worksheet, then you're going to miss some numbers. You have to do the statement of changes in owner's equity to find out what you're going to move from the income statement to the balance sheet. So don't skip that step. Okay?